This is the briefing for Friday, December 2nd. First, let me apologize for my voice because I am dealing with a cold and hopefully I'll get over it quickly. The briefing today is going to be similar to what it was last night because we really didn't have a whole lot of change in terms of today's trading, except for one thing, which I'll get to in a few minutes. Now, I want to go back in time for just a little bit. Now, we know that we've got a series of lower highs and lower lows going through this area. We get a little bit greater degree time frame, counter trend rotation, a breakdown again, and then another greater degree time and price, then more lower highs, lower lows. So basically, the way I've looked at this in my analysis is that this is a downtrend and that we are in the process of completing a counter trend rotation to this move to the downside, similar to what this move was here. You can see that in degree of time and price, it's about the same. And then, of course, this was developed on lower volume. You can see volume falling off, especially during the Thanksgiving weekend. And it has developed into three steps where there's equality between leg one and leg three. Now, the important thing here is that we have reached the point where it must decide, the market must decide whether it is going to go higher, in which case this potentially is not a counter trend rotation, or we're going to see some type of move back to the downside that would test this low or potentially take it out. Now, when we analyze, or at least when I analyze markets, I like to come up with a probability of one event occurring over the other. So I know that if the market does this, I'm going to do that. If the market does that, I'm going to do this. So yeah, it's kind of funny, but the market's either going up or down, and it depends on the degree of time frame that you're analyzing. But I also have a probability assessment that says that I feel a higher probability of one event occurring over another, but then I always look for clues that would suggest that the lower probability is actually becoming the higher probability, so I can adjust my trading in that manner. Now, my thesis, my analysis is that this is a counter trend rotation. The quality from leg one to leg three is at 410 in the spiders. That's important. Now, it does not preclude the market from trading a little bit higher and then turning lower. But if it trades much higher, then that's going to suggest that my analysis was incorrect. The lower probability that this is an area of rotation is becoming the higher probability. And when I say that, you can see the rotational pattern that's been occurring here, where we would test, the next test would be the upper extreme at the 430 level. So that is where we are in terms of the market, at least at this point in time. Now, I want to go back to, this is the chart for the spiders, this is the Qs, and this is the diamonds. Now, the Dow Industrials are just a completely different animal. They are just really on fire and testing their upper extremes. This is not a counter trend rotation, but it is an impulsive move to the upside, except for this last move into this high. And you can see what happened with volume here in the diamonds, absolutely collapsing until Wednesday's trading, when Chairman Powell gave his comments and the market just absolutely caught on fire. Now, I want to talk about that just for a second. Now, this was projected, and as you know, I've been projecting that the possibility for this move is to reach 410 in the spiders. But this was unexpected, mainly because it was a strong move impulsively from price development, but it was strong internally, and you can see how strong breadth was and how strong volume was on that one day. Now, what happens from here is going to be important, and the one crux to this matter is the fact that the market had, with the employment numbers today, the opportunity to begin a sell-off that did not occur. In fact, it gapped down. It was down, I think, in the pre-market about 400 points, and then it clawed its way all the way back into the close today, closing near the 410 level. Now, the same thing is occurring in the Qs. You can see this three-step counter trend rotation. 290 was where equality is between leg one and leg three, and you can see that it exceeded it slightly by about 5 points, and then of course traded down below it and then back up in today's trading. Now, in Thursday's trading, or I should say in Wednesday's briefing, I caution to watch for a divergence in market breadth if there was a higher high over Wednesday's high, which is exactly what occurred. And you can see that the breadth was diverging. Breadth was diverging on Thursday, which suggested some type of pause or rotation lower. And then, of course, we got a continuation of that move in today's trading. So where we stand now is that 290 to 295 in the Qs is really important upside resistance. 410 in the spiders is important upside resistance. And if we happen to trade much above 410, that's going to open up the possibility of trading to 430. And if we break through 430, then this move, which is a three-step counter trend rotation to a much longer degree time frame, would suggest that we're going to test the all-time highs. I think right now that is a lower possibility, but I have to hold it open as it is. There is potential there for it. So watch what happens in Monday and Tuesday's trading around this 410 area in the spiders. And then to the downside, watch this 390 level. Now we have somewhat of a counter trend, or not a counter trend, but a pause area here, a little bit of extension above the upper extreme, and then of course backing off from 410. So 390 is going to be support in the spiders, and in the Qs we're looking at the 280 area as support in the Qs. And you can see Qs a little bit weaker. This high and this high are pretty close to each other. So while it did extend up above there in vertical development, it looks like it is in the process of rotating back through the range. Monday's trading is going to be extremely important because if we break through these resistance levels, 290 to 300 in the Qs and the 410 area in the spiders, that's going to suggest the potential to move substantially higher. Now, in terms of overbought and oversold, on Wednesday we reached a point of being overbought, but not extremely so. Since then, the indicator has gone to neutral, but you can see that the indicator is converged. The three indicators are converged, which suggests a market that is tightening and that there could be a breakaway move in one direction or the other. Surprising today with the employment numbers that it did not happen today to the downside. But then again, we just have to interpret the information the market gives us and not tell the market what it's going to do. So watch these areas very carefully in Monday's trading, breaking through 410. I'm going to certainly look to be long, and I'm going to stop it right below 410. If it's going to go, I want it to go and not linger back in this area. Same thing with the Qs, long above 295, and it needs to go as well. Watch the market internals. Volume needs to be increasing. We had a good increase in volume on Wednesday's trading after Powell's comments, but we need to see that continue to increase going through the end of next week. Have a great weekend, and I'll pick this back up again on Monday.